And in our top business story, the UAE advanced 3 ranks in the latest World Bank's Doing Business 2015 report to settle at 22 compared to last year's rankings, maintaining its lead in the Arab region and beating some advanced European and Asian economies. Doing Business 2015, Going Beyond Efficiency, ranked the UAE among the top 10 companies that have improved the most in performance on its indicators since the previous year. The report measures the ease of doing business in 189 economies based on 11 business-related regulations, including business startup, getting credit, getting electricity, and trading across borders. This year's report uses new data and methodology in 3 areas: resolving insolvency, protecting minority investors, and getting credit. The World Bank report noted that the UAE was the only Arab country in 10 economies which have introduced quality regulatory improvements in the ease of doing business. The report singled out 3 sectors: registering property, getting credit, and protecting minority investors, which the UAE has reformed significantly. According to the World Bank flagship report, the UAE ranked first in paying taxes category, 4th in dealing with constructive permits, getting electricity and registering property, and 8th in trading across borders. Singapore topped the global ranking on the ease of doing business, followed by New Zealand and then Hong Kong. Emaar Properties has reported a 37% growth in net operating profit to 2.489 billion dirhams in the first 9 months of the year. According to a statement, this is a 37% rise from the same period in 2013, driven by robust financial fundamentals, surging investor confidence, and Dubai's strong economic growth. Revenue for the first 9 months of 2014 stood at 7.039 billion dirhams, while revenue for Q3, July to September, stood at 1.976 billion dirhams and net operating profit at 758 million dirhams. Mohammed Al-Abbar, chairman of Emaar Properties, was quoted as saying that this has been a record 9-month performance for Emaar, as we delivered on our promise of strengthening shareholder value. We have set an industry milestone by announcing a total dividend of 17.12 billion dirhams this year through our strategic growth initiatives. This comes as the developer behind the world's tallest skyscraper raised 5.89 billion dirhams in the public share sale of its shopping malls unit. The company received orders worth 172 billion dirhams, making it more than 30 times oversubscribed by regional and foreign investors and 20 times by retail investors. Etihad Airways has announced that Mumbai and New Delhi will become its first destinations in India to be served with triple daily flights, strengthening its offering with Jet Airways into and out of the country. According to news agency WAM, both cities will be upgraded from their current double daily frequencies with a 3rd daily flight to Mumbai starting on the 15th of February 2015 and to New Delhi on the 1st of May 2015. Along with Jet Airways services, both airlines will connect Abu Dhabi to 14 Indian cities with over 200 return flights each week. Etihad Airways will also launch a daily service to Kolkata, the capital of West Bengal, on the 15th of February 2015, and Jet Airways has announced it will soon launch daily services between Abu Dhabi and Goa, Lucknow and Pune. James Hogan, President and CEO of Etihad Airways, was quoted as saying, "Already in the first half of 2014, more than 620,000 passengers flew on our India services, a substantial increase of 51% year-on-year. The launch of triple daily services to Mumbai and New Delhi, our most popular routes in India, will allow us to meet the growing market demand." Dubai's 4- and 5-star hotels witnessed a mixed performance in September, with occupancy levels growing 2.1 percentage points to 78.2%, according to the latest report. However, average room rates declined 3.2% to $231.36, and as a result, revenue per available room reduced to 0.5% to $180.88. The figures come from TRI Consulting, who released the latest Hot Stats survey of full-service 4- and 5-star hotels in the Middle East and North Africa region. Peter Goddard, managing director of TRI Consulting, was quoted as saying that Dubai hotels showed a growth in occupancy levels as the market witnessed a return to business after the summer period. Although hotels recorded a 2.1 percentage point increase in occupancy, a rare decline in average rates directly impacted RevPAR levels for the month. Over in the capital, the recovery of the Abu Dhabi hotel market continued to gain momentum with a positive performance in September compared to the same period last year. The survey showed that average room rates in the capital increased by 4.2% to $128.96, while occupancy grew by 6.6 percentage points to 76.6%, resulting in RevPAR rising 14% to $98.76.